Generally, if we see a subprime foreclosure, we've come to expect we probably will find some kind of fraud in there as well.
I mean, you did what you had to do. And again, if that meant manipulating documents so that you can get them out, so that they could conform, that's what you did.
There's growing evidence that simple fraud, carried out by low-level loan officers, encouraged by company executives, and rewarded by Wall Street banks, may be at the very heart of the current financial crisis. During the housing boom, fast funds was the name of the game, and home loans were hammered out at a record pace. But now, as foreclosures continue to rise, people are taking a closer look at the terms of those mortgage agreements.
Some bad arithmetic going on here.
Lisa Fisher runs an organization that helps homeowners fighting foreclosure.
I'm still trying to wrap my mind around the fact that something that seems so simple on a case-by-case basis, I mean, that is fraud and lack of any traditional sort of underwriting, could cascade and explode into a global financial meltdown.
Tamara Loatman-Clark had an insider's view of one of the largest and most notorious companies pushing bad loans.
I worked for a mortgage company, Argent Mortgage, which is the subsidiary of Ameriquest.
Her job was to bundle the risky loans and sell them to the Wall Street investment houses that were eager to cash in on the high interest rates of these subprime mortgages.
You know, there were incentives to get as many done as possible. So on a typical Thursday, I may have 15 or 20 files that I need to get funded somehow. And, you know, you'd work very hard to get 20 files funded. Whatever hit your desk for the day is what you wanted to get out.
With Argent's help, Ameriquest went from being a mid-sized Southern California lender in the mid-90s to being the largest subprime mortgage company in the U.S. Ameriquest founder and owner, Roland Arnold, amassed a $1.5 billion personal fortune. Arnold was the largest single donor to George Bush's 2004 re-election and ran a massive ad campaign that made his company a household name. He put Ameriquest's name on a ballpark and 2 blimps. They even sponsored a Rolling Stones tour.
Proud sponsor of the American dream.
Ameriquest ads were famous for their tagline, "Don't judge too quickly. We won't." But speed was actually the key of Ameriquest's success. Employees were under constant pressure to close the deal fast. In this video produced by the Consumer Warning Network, people ID'd as former Ameriquest employees detailed the illegal practices they say the company encouraged.
Every closing we had really was a bait and switch because you could never get them to the table if you were honest.
The entire system is built to do whatever you can to close as many loans at the highest fee amount as possible.
There were instances where the borrower felt uncomfortable about signing the stated income letter because they didn't want to lie, and the stated income letter would be filled out later on by the processing staff.
It was the Wall Street business that drove the frantic pace. Even before proper papers were signed, Ameriquest was bundling the loans and passing them on.
And so sometimes when they came back and you're talking about, you know, names not properly on mortgage documents, you're talking about missing documents, like internally the incentive was to do whatever you needed to do to get them out. And that sometimes meant that you manipulated documents to get them out.
So you're saying the goal was to make these loans and then get them off your books as quick as possible?
Exactly. That was the pressure.
But who were the people who were like the most hungry for these loans?
Bear Stearns, Citigroup was another one. Basically the ones that were our hardest hit were the people who invested. And these were the people that we were shuffling these documents out to by any means necessary.
In 2005, Ameriquest was charged with misleading borrowers and falsifying documents in a class action suit filed by 49 states. The company settled with a payment of $325 million. Ameriquest CEO Wayne Lee left the company at the height of its legal troubles, and he got a generous parting gift, a $50 million consulting agreement that contractually prevented him from speaking about Ameriquest practices for 5 years. Despite the scandal, Citigroup decided to buy Ameriquest for an undisclosed amount, adding the failing company to a balance sheet already full of toxic Ameriquest loans.
The investment bank of Citigroup, they have all these bonds that were created from mortgages that were based on lies. So what's on their books is a mess. They own all of these bonds that are backed by mortgages that were ultimately creations of Ameriquest's imagination. They don't really know what they have. Their assets are filled with securities that were rife with fraud when they were made, and anybody with any common sense who would have spent any time looking at those mortgages would have known it.
Out of the loans that you worked on, I mean, what percentage of those loans do you think people are now having trouble paying or possibly even facing foreclosure?
I would say the majority. I would say 90% or upwards of that. It's pretty sad, actually.
Tamara quit her job at Ameriquest at the height of the housing bubble. She's now a lawyer, helping homeowners fight against foreclosure. And many of her clients live in northern New Jersey, the same region Tamara once worked over as a loan closer.
I think back to the volume of business that we did in New Jersey. These loans generally were tied to certain areas, mainly low-income areas. Hindsight being 2020, you can look back and say, wow, I had a hand in all of this. But, you know, if I was a young professional, and I was at the time, I was doing my job to the best of my ability. Things didn't look quite right. But again, if you're a low-level employee, you don't make those kind of, conscious decisions.
This came from the very top. This was an industry broken from Wall Street on down. So if you're going to indict people, you need to take a look at the heads of companies like Ameriquest, who set a culture up that said, do whatever it takes to close a loan regardless. And to the Wall Street banks who pumped money into those companies and said, we want you to sell us millions of mortgages, and we're not going to look at what you're selling us.